Good evening and welcome to Money Minutes. My name is Lisa Pallavi Barbara, and today we are going to talk about a product which is fairly new on the block and gives retail investors a good access to a very specific theme in the market, which is PSUs. The CPSE ETF was recently launched by the government, and the NFO actually got a roaring response. I've got Kayezad E Adajania with us, and he's going to give us details on how this ETF is actually faring. Hi, Kayezad. The NFO is now over and the ETF has listed as well. So can you give us a quick update on how it's doing?
Well, so it's listed CPSE ETF. That's what it's called. It's listed on the NSE as well as the BSE. And from the time that it was listed till today, investors who had invested in the NFO would have gained about 14%. And earlier when the mutual fund was launched, there was a discount of 5%, which was offered on the listing price, and a loyalty bonus of 1 unit for every 15 units subscribed by the investor, which is the loyalty bonus. So the loyalty bonus is applicable only to those investors who had invested in the NFO stage and would have invested till 1 year. The loyalty bonus only accrues to those investors. So now it's listed on the exchange, and basically you need a demat account to buy this thing if you want to buy outside the NFO stage also, and it's open for subscription.
Okay, so the NFO seems to have had some good offer for investors, but is it still viable to go ahead and buy in the secondary market?
Well, look, if you want to buy a CPSE ETF right now, the loyalty bonus will not be available to you, and the discount also will not be available to you. Of course, the risk levels of investing in the scheme, are still there. If you see the top three skips, GAIL, Coal India, and ONGC, they still occupy about 45 to 50% of the overall index. So it's still quite concentrated around the top 3-4 scripts. It's also very thematic because there are no banking stocks in. So obviously the risk levels are there. So having said that, obviously the future outcome of PSUs in the next 3 or 4 years seems to be good, because the valuations have been at almost historical lows, or at least lower than the past 10-year averages. So obviously there is scope, but you need stable government, you need a stable policy making, which people expect would happen maybe next month or so after the election results come out. So obviously the risk levels are there. The attractiveness of the CPSE ETF obviously today is not as much as what it used to be in the NFO stage. So you can invest in the scheme if you want to, but it should not be a first or second or third investment. It should only appeal to you if you already have a very well diversified mutual funds portfolio, and if you want to take slight risk on your portfolio, if you want to sort of add a flavor to your portfolio, then you can look at CPSE ETF. Otherwise it's best to avoid.
Okay, thanks, Kayezad. So there you go. If you're absolutely a first-time equity investor, then maybe this is not a product for you. But if you're well-versed with equities, then to add some diversification into your portfolio, this can be a good long-term product. However, you have to watch out for the risks, especially the event risk around elections in the very near term. That's all from us. Do keep watching for more investment ideas and updates. Thank you.